Welcome to Trading Lounge and the US indices. We'll be looking at the S&P and the NASDAQ. And with the S&P here, as you know, we've been looking at it in two ways in terms of a bearish market that we're looking at here and also a bullish market. So today we'll be also doing the same thing as well. So in the daily chart here, the S&P here in terms of intermediate wave 3 here, an A wave here, then an A and a B, and 5 waves up for a C wave of B, and then we'll be looking for 5 waves down from minor wave B down to minor wave C of intermediate wave 4, and we'll be looking at that in minute degree 1, minute degree 2, 3, 4 and 5. It appears that the move down through here can be completed as wave 1, and we'll see a rally as wave 2. So let's just go into the 4-hour chart here and have a look at that. So in this instance here, we would need to, let me just squeeze all this in a bit. That makes it a bit easier. So in this instance here, as wave 1 here, wave 2 here, wave 3 here, and wave 4 and wave 5 here. And in this case, the 50-60% retracement level is here, so we can gravitate over to the closest largest number, which will be 2750. So in that vicinity there, we can look at that there. If there's a mistake with this and for whatever reasons the market's going to move lower, well then we need to put that there and trigger those short trades to the downside there, because we don't want to miss anything just because we're wrong. We'll also look at the bullish count now, and the bullish count, where are we here? So beg your pardon. So let me just put this, squash a bit more in there. Apologies about that. So the bullish count is looking at this as wave 3 here, an A wave here, a B wave here, and a C wave here, and looking up at this as 1 and 2 and 3 and 4, and wave 5 here for wave 1. And then from this low here to this high here, looking for the 50-60% retracement level, which is a little bit lower here at this stage here, but this can count okay as wave A here, wave B here, wave 1 and 2 and 3, and wave 4 and wave 5 into this space here. So it's possible to see this market move up into new highs here. At the same time, this 2750 here, as I mentioned before, is the danger zone here, and we can see further downside from that point there, so we need to be a little bit mindful of that. What I normally find too, which is not in the Elliott wave principle book, and I think that's fine too, because even when Elliott first wrote the book, then Pretcher and Frost, you know, they've changed a few things along the way as well, like introducing the wave X, for instance. But what I'm talking about here is that when you've got the 61.8% mark here, okay, if you get 1, 2, 3, 4, and 5 waves into that, close into that 61.8% mark there, you get 5 waves into that, well then you know that you've got a bullish market at that point. If you only get like an A and a B and a C wave into the 61.8% mark, roughly, then it's highly likely that you've got a corrective pattern at that point. So really it's what occurs in that distance here that can help, because even if you had 3 waves here, you might still think that it's bullish in terms of wave 1 and wave 2 and wave 1 and wave 2 of a smaller degree and to the upside. It's just a little sort of guide stick that can be very helpful, so we'll be looking at using that there as well. So just continuing the bullish scenario here for a moment, and I'll just go back into here to open this up a little bit. We can see it in a little bit more detail here. So yeah, wave 1 and 2 and 3, an A and a B and a C for wave 4, and then down for wave 5. So let's just go into the tick chart. We know that now we know that the 2750 area here, which is an important level between 2700 and 2800 where this market has traveled from. This is the halfway mark here, and we can see that it's significant because it was support here and now it's become the resistance here. You know, there's obviously there's the good old faithful trend lines and so on that you can put through here that will play its part there as well. So we have been short here, but the 2700 was the target area. So in this instance here, if I just move this here, this is a bullish count. I'll just leave that for the time being. We know that we need to be bearish below this point here. I'm just going, what we're interested in now is what occurs here, okay? So obviously we're in a downtrend. If the 27 becomes a retested resistance, then we need to be on the short side. Otherwise, we need to play this up to the up into this space here, and at the same time, we need to monitor and observe to see if it's in 5 waves or 3 waves. Let's move into the tick chart here for this. So from wave 4 here down to wave 5 here of C of 2 here, but mind you, this can also be wave 1 here, and then we would be looking for, just copy this and bear this with a second, wave C here, and also copy that for wave 2 here. I mean, as traders, it's really important not to become a bullish person in the markets or a bearish person in the markets. There's no benefit in that. You must be, you must see both of them as the same thing. I know it takes a while, and can take years, and you tend to have favorites of being short or being long and so on, but you need to be balanced in those 2 areas. So this is not a game to be fixed in. It's a game of probability. It's a game of setups. It's money management and those sorts of things. So in this instance here, from the low here, we can count 1 2 3 4 5 here. Yep. And then we can count a correction here. This is a tick chart, 100 ticks, so an A and a B and a C here for wave 2, and the move up here, I haven't actually pulled it apart. I'm just assuming it was wave 3. So wave 4 here, which can play out as an A and a B and a C wave here further, and then I can't draw on this side of the tick chart, but we're looking for one move up here. Now what I want to say about this is that if we get 5 waves off the low here, as in terms of 1 and 2 and 3 and 4 and 5 here, if that's the case, then we're going to get an A and a B and a C correction. So let me just shapen this up a little bit here, so it will be something like this here. And this can also be, copy that can be wave 2 here as well. Maybe I should be 1 degree smaller. If we get 5 waves here, then we get a correction back to this box here, the 2710 area, the 50-60% retracement level, and then we'll see a move up into into this area here, which we know just roughly there is going to be the 61.8%. Number 5 here, the midpoint. So when we talk about the trading levels, we're talking about the sub-levels in here. So sub-level 1, 2, and 3 that make up group 1. And then we've got the midpoint, and then 65, 72, and 80. Or in other words, the Fibonacci sequence of numbers of 1, 2, 3, 5, and 8 as a price ratio. So yeah, let's see how we go with this. There's another point that I need to make here too, is that this 1, 2, and 3 here so far is in 3 waves, so it can be corrective. So that means that it can fail and continue down here, and then I would be wrong. And as I mentioned before, if I can just copy that, I'll just put that green line there as well. I mean, if you're long from in this space here, then the stop would need to be under here for the time being, under the 2700, and the idea is to get to the 2750. Of course, from wave A or wave 1 back to wave 2 or B is going to be 50-60%, so it's going to be it's going to be pulling your intellect there. But whatever happens, if that 2700 becomes the retested resistance, then you need to move down short from that. And retesting resistance is this is a good example here. So this, the move, the breakout down through here, most of the time will come back and retest. So once you've retested it here, then you've got this low here to go on to. If that's breached, if that low is breached, then you can be short from that point, and it just keeps you safe. And then, in this case here, we can see that it was resistance for quite a long time, but didn't trigger any short trades, and then it's pushed above and came back and sat there. So it's migrated from being resistance again to support. So then that creates the long trade setup on this side. And of course, there's ways to get in earlier on all of that, but I won't go into that here at the moment. But the little move up here can be counted as an ABC correction, and that's corrective at this particular point. We won't know if we get 5 waves here until we get those 5 waves. But if we get those 5 waves, then you get the ABC, and then we can move from that point. Sorry to ramble on so much. The NASDAQ, same as well. So in this instance here, we've got wave 3 over here for the bullish count, and we've got this is an A and a B and a C and a D and an E wave here for wave 4, and then looking for this for wave 1 to the upside of 1 and 2 and 3 and 4 and 5 here for the upside here. And in this case, we were looking for a move back into the 50-60% area here. We've got that, and it could be counted as an A wave here, a B wave here, and a C wave here, and then we can move up from here. Some of the long trades in the NASDAQ, we've got Tesla and Etsy, and they've had their wave 4 pullback, so in a bigger picture they should be ready to move to the upside as well. Also too, with the same with the this market, with the SP500, we can have the bearish count as well, where wave 4 here is not completed. So when I've got it grayed out, it means an alternative count. So in this case here, it can be counted as a B wave up here, and then a C wave for wave 4 here in this case. Okay, so we'll look at that. But all we need to do here is we'll go in and have a look at this, shall we? But we need to keep two counts in mind here. So the 4-hour chart here, okay, so we don't need that anymore. That's all happened there. So just let me clean this up here a little bit. That's all good. So in this instance here, we were looking at this being 5 waves up here for to finish this as wave 1. It can also be copy as wave B. Well, wave B wouldn't be there. Wave B would have to be, in this case, move it and sit it up here as a top. But that's, I just don't have that on the intraday. I mean, this little move up here to me, you would think it would be in 5 waves, but it actually counts better as 3 waves to the upside here. But look, as a bullish count, let's just go over it. Wave 1 here, A, B, and C here, and we'll have 1 and 2 and 3 and 4 and 5 here. That's the low, and we need to move up from here. If there's going to be a failure here, it's going to be from here, or it's going to be from here, because it's probably only got 3 waves up here as well in that case. So in that case, we need to just look at being short on the downside. I mean, we've got the little trade war thing. Trade war. I mean, it seems more personal for Trump. So yeah, look, in this case, if in this case we yeah, these are the things. So we need to be short below here. We can probably get a better short under that 4-hour low here. But the 7,000 as a resistance, then we can look to short from that point there. So they're the things in the bigger picture here, but let's just drill in and refine things a little bit. 2 hour chart, haven't done anything on that. So 1 hour chart. So with the 1 hour chart here from wave 1 here, the A wave, the B wave, and 1 and 2 and 3 and 4 and 5 here. So we should see this just continue to move up and make new highs. Now, if that's the case, we can be long above this high here, and the stop needs to go under this low here. Okay, because this would be wave 1 here and wave 2 here, so that cannot be breached. So that's that there. We can move that across here to be also to be short there as well. Okay, so that takes care of staying with the trend, being with the trend. Okay, at in this juncture. The other point here too is that this is the 50-60% retracement level up here. So once again, like the US markets, we need to see if we get to this box in 5 waves or 3 waves. And if we get to the box in 3 waves, then we'll need to, just in very simple terms, we'll take that low there whenever it comes in, and then we can use that as a short trade trigger to the downside. That's just in broad brush strokes there, of course, but it gives you something to work with, you know. Rather than this lower one here, we can get a better price up here for that. But we do need to see that in 3 waves and not 5 waves at that particular instant. So I'm just going to save that. So either way, because we've got 5 waves here, we should see either a move straight up through here, going up higher, or we'll see a move to here. We'll see an ABC rally to here. So after 5 waves, we get a correction, and that's what we're getting. That's what we're seeing, and that's all good. I don't know if I've updated the tick chart. Does it matter or not? No, I haven't, but let me check. 1, 2, 3, 4, 5. So 1 and 2 and 3. Yeah, we've still got further to go. So we've only got 3 waves up here so far. So yeah. Anyway, you know what to do here. That's 7,000 as the resistance at that point. Yeah. Also too, while we're here, I mean, if that's going to push to the upside here, then we can look at that moving up into this space here, 7072 area here, and then we can look at this here, taking this here, and that at that point here, then we will be able to see. So we can just have that in here, and then grab another one of those. Market can pull back into this space here at this stage. If we've got 5 waves up, this is where it can pull back to the 720, so you'll need to accommodate that there as such. I'll just save that. And thanks for tuning in. It's much appreciated, and have a great weekend. Cheers.